This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. Scott Norse here with your Forex Report. Today is Tuesday, July 15th, 2008. The dollar's gotten off to a rough start this week and even fell to fresh all-time lows against the euro overnight. However, we have since seen the U.S. currency claw back in the broad market and should close today on a relatively strong note. There are a couple of possible reasons the greenback has rebounded this session, none of which include today's economic reports. This morning's data lineup showed PPI up 9% on the year in June, a negative 4.9 reading on Empire Manufacturing, and core retail sales came in just a touch below estimates. Furthermore, Ben Bernanke's testimony before the Senate included what sounded like a downgrade to the economic outlook. The Fed chairman said U.S. consumers and businesses face a number of challenges and expects economic growth to remain subdued. So why is the buck doing better? Well, the first and most obvious catalyst is the big drop in oil. President Bush rescinded a presidential order against drilling in Anwar, which may have had a hand in crude dropping about $10 a barrel at one point today. This is always good news for the buck. Additionally, testimony from Paulson and Bernanke on keeping the financial system sound may have alleviated some fears. Technically, we are now staring at a big double top on the daily euro-dollar chart. The pair made a high of 160.20 in late April, and this morning touched 160.40. The current price is just a few pips below 159, making today's breakout a big failure. We believe it's too early to call a top and say a reversal is coming, but this is a strong technical signal and could prompt a good deal of selling in the days ahead. Similarly, the dollar Swiss nearly touched parity today, which is now trading about 100 pips higher. We believe the current price is very attractive for long-term investors, but can't be sure yet that it will not try to move lower again in the very short term. There really are not many exceptions in the majors as far as the dollar recovery is concerned. However, most currencies outside the euro will still close in positive territory against the buck today. The trend and tone is still very bearish dollar in the big picture, but given today's bounce, we must be open to a possible rally in the U.S. currency in coming sessions. Until tomorrow, have a wonderful night trading. Take care.